So I hope you had a good weekend, and this week coming up, we've got a major week coming up in the stock market. This is going to be the catalyst of where the stock market is going to go for the next few weeks, and we're going to talk about that so you guys know about this information, how important it's going to be for you as an investor coming up this week. Just before we do that, if you're on the Patreon, go check out this exclusive video that was just posted. It was a stock request, and we looked at the three stocks, which was Moonpig, Speedy Hire, and Perion. So if you do want to see exclusive content on Patreon where there's 2 exclusive videos a week, join through the link in the description. I also bought a stock which I've not bought for, I think it was 5 years or 6 years as well, which is something that you don't hear every day. It's been a long time since I bought this stock, but I bought this stock earlier today for the first time for a very long time. But let's get stuck onto the key things that are going to be happening this week. So you guys probably know the stock market at the moment this year came out of the starting blocks unbelievable. The stock market rallied up through into February, and then we kind of flattened a little bit through the month of February. And in fact, if you could see where the market really started to downturn was around this week, beginning the 13th and 14th of February. And since then, the stock market has been a little bit stagnant, not much has been happening, and it has been giving some of the gains that we've had so far this year away. So when we look at that, what is the root cause of why the stock market has been stagnant and there's fear coming back into the market at the moment? Well, this is the key reason. You can actually pinpoint it to the day exactly. 14th of February, and like we said, we looked at the S&P 500. If you look at the 14th of February, boom, that's where the drop started to happen. What spooked the market on the 14th of February? It was the inflation data. Inflation was rapidly coming down through the back end of the year into January until we got to the 14th of February. What happened on the 14th of February? Well, if we look at what inflation was predicted to come in at, the consensus was 6.2%, and Trading Economics actually predicted it to come in at 6.3%. What did inflation come in at? It came in at 6.4%. So inflation did drop, but it only dropped by 0.1%, and this broke the trend that we've been on. This broke the trend of inflation rapidly coming down, and everybody was excited about this inflation coming down, but this 1 month here changed things massively, and everyone got spooked that, oh, hold on, inflation has stopped coming down, or it's this 1 month made everyone panic, and the knock-on effect was onto the Fed. It was like, oh, are the Fed going to carry on hiking up interest rates at a very aggressive rate? Now, funny enough, the Fed were not really panicked by the situation. They still carried on bring down the interest rates, but we've heard from recently the tone start changing. We've heard that, oh, if this is going to continue, inflation being this high, we are going to see more aggressive hikes from the Fed. We're also seeing that potentially inflation, what the suggestion is that we're now going to have a second month where inflation does not come rapidly down, and that has the knock-on effects, and that's what everyone has been pricing in. Inflation is going to have another second month of not coming down rapidly. It has stagnated coming down, and interest rates will remain high and increasingly high as well, which is what we don't want to see. Now, this week, 24 hours, the 14th of March, we are going to see once again the next batch of inflation data. Now, this has actually changed since we last spoke about it. Some of you guys that may watch the videos every single day, and shout out to you guys that do that, you might know that the consensus originally was for to go from what came in at 6.4 last time. The last inflation rate came in at 6.4. If you looked at the forecast, it was actually this month to go to 6.3. Now, if you look on the video that I talked about 2 days ago, the actual interest rate, the inflation rate was actually projected to come in at 6.2%. So now it's gone down from Trading Economics down to 6.1%. And actually the consensus at the moment from analysts are expecting inflation to come at 6%. So if this actually comes back down from 6.4% down to 6.6%, this is actually, this will be a very good move back in the right direction and might get the market a little bit more excited. So this is key. We do really need to see on Tuesday inflation come at 6% and not 6.4%. And what will really excite the market and what will potentially stick the market back into rally mode like we had at the start of the year is if inflation comes in at the 5% range. That is where everyone will start to get excited. So that's what you're looking out for when we get round to Tuesday this week. Now, the big thing that is important to say is that when you do look at the situation at the moment though, a lot of the things that have been coming, the data that's been coming in recently is that inflation has not been dropping rapidly. You look at oil prices haven't really been coming down rapidly as what they have been doing. So for me, in my opinion, I'm a little bit nervous for this inflation data that's going to be coming in. But those are the key things that you're going to be looking for. 6.1% will spook the market, or anything above that will spook the market, and we'll probably have a poor few weeks. If you look at if we come at 6%, we might do okay, but we really do need to see a 5 point something to get the market excited again. Now, I say all that, and potentially everything could change, because then we have another big batch of information coming in, and that's going to be the Fed. The Fed will be meeting on the 21st and 22nd, and they'll be setting out their interest rates. Their interest rates are going to be really interesting, because previously everybody was starting to talk about, could they potentially halt the rates? Could they potentially only go up 10 basis points? Could they potentially go up 25 basis points? Everyone at the moment is factoring now, I think the odds are 70% chance of a 50 basis point hike from the Fed. Now the Fed, without doubt, are going to be staring at what this inflation comes in on Tuesday, and that will be the key decision. So this is why this is going to have it. There's two bits of really key information that's going to happen. This is why it's key for this to be positive. If this is negative, or inflation isn't rapidly coming down, you're going to see the Fed, without doubt, coming with a 50 basis points hike. If inflation comes in what is expected at 6%, or even the 5 point something, then everyone's going to look at the Fed and go, hold on, the Fed actually might only do 25 basis points, or dare I say a 10 basis points hike. And there's going to be a lot of going back and forth. There's going to be a lot of changing very quickly what can potentially happen. So you have the double whammy, you have the inflation data that's coming out. That could create a lot of fear in the market. It could get everyone excited in the market. And then you have the Fed. The Fed once again could get everyone excited. They could potentially kill the market, potentially on what their decision can be. So that is going to be massive. So we've got basically two really big best days that's coming up. And this will, without doubt, will cause this. Last time we had the inflation data, it caused this. This time around, and the Fed, they're going to dictate where the market goes through the months of March and April. So this is what's going to be in the market in the next few weeks, and this is really important. So we'll see what this comes out this week. We'll see what inflation comes out. We'll see what the Fed put their what the commentary will be, and what potentially the point basis hike they bring out. I'm sure we'll do a video later this week to revisit it all. So those are the key things to be staring out at the moment, and that's what's going to cause stock market insanity in the next 24 hours, even 48 hours. So keep an eye on that. There's a few companies that are going to report on earnings this week that are worth shouting out, that are just to keep a look at. If you look on Monday, there's not really too much, but I am going to be keeping an eye on Turtle Beach, and hopefully they get past their hard comp numbers that they've been having for the last couple of quarters. So hopefully they put in something positive there. On the close, we've got Stoneco. I know a lot of you guys have been asking about this company, about Stoneco. For me personally, I have fintech exposure with like Brazil, with Mercado Libre. So I personally, it's not one that I'm chasing at the moment, but I know a few people are looking at it as a turnaround play, but that's my opinion on that one. Skills are going to report in earnings. Hopefully there's a bit more of a positive turnaround going on in there after, once again, a company that has been taking a lot of hard comps at the moment, so we'll see what happens there. On the Wednesday, Oatly is a company that I'm keeping an eye on, but I think they just lose too much money at the moment for me to be buying it. But what'll be really interesting to see is, with the price of oats coming massively down, does that have an impact in the financials? Do we see gross margins turn positive? So I'll be looking at that one for that reason, but I don't think it's close to me being an investor in that one, to be honest with you. Adobe on the Wednesday. This is a good one. I'm looking at Adobe, and potentially it could come an opportunity. Sometimes it has crazy drops out of nowhere, and if it has one of those crazy drops, maybe I come and buy it, especially in that $200 range. I think that comes an interesting opportunity. So I'll be keeping an eye on that one, an eye on that one for that reason. And then we've got a couple more. Five Below, Unipath, that I think a few people are interested in there. Thursday after close, got Dollar General, Blue Apron. FedEx is going to be a big one that a lot of people are going to be looking at. And for a second there, I saw Meta, and I was like, hold on, this can't be Meta. It's not their logo, and they've already reported earnings. But yeah, there's a company called Meta Materials that is reporting earnings. So yeah, don't get too confused there. But for a second, I was like, it's not Meta. Who is actually who's got a very similar logo or the same company name as Meta? That we're thinking of, Facebook, for example. So don't worry about that one. Playboy Playboy was actually a company that I was really interested in a while ago. Unfortunately, they've looked like they've stagnated a little bit, so I'll keep an eye on that one, but the financials did not turn into what I was hoping for, so I'll keep an eye on that one, but unfortunately I think the financial performance hasn't been good enough in that one recently. But yeah, so we've got a few really interesting companies reporting earnings. I think there's Weatherspoons on the UK that are reporting earnings, potentially an interesting potential turnaround play maybe in a little bit on the UK side of it. I think Cineworld are actually reporting earnings. I know a few of you guys do like Cineworld as a bit of a turnaround play. I think they are reporting this week. So yeah, those are some of the companies that are reporting earnings. Not many as you would expect, but a couple just to point out there. So yeah, those are some companies reporting earnings and the two key events this week, which will be definitely driving the stock market either up or down depending on what data comes in from them and the decisions that they make. So I hope you enjoyed the video anyway, guys. Have a great week. Catch you in a bit.